People looking to buy or sell a home this spring are paying close attention to mortgage rates. The average 30-year fixed-rate mortgage rose to 7.17% for the week ending April 25, according to Freddie Mac data via the Federal Reserve. The rate was 7.10% the prior week. Home buyers and sellers may not see any relief soon. It remains unclear when the Federal Reserve might make its first rate cut. Experts anticipate the Fed will continue to hold rates steady in this week's meeting, and will trim borrowing costs in the second half of the year. "I believe our first rate cut is penciled in for July," said Matthew Walsh, Assistant Director and Economist at Moody's Analytics. More from Personal Finance. Why new home sales inch higher despite 7% mortgage rates. Buyers of newly built homes can face a property tax surprise. The November election might influence Social Security's future. Until then, average mortgage rates might continue to bounce around between 6.5 to 7.5%, Walsh said. "We might not see rates fall in any meaningful way until the later half of this year," he said. "The biggest thing when we're looking at mortgage rates right now is volatility," said Nicole Bachaud, a senior economist at Zillow Group. While some buyers have come to terms with 7% interest rates, the volatility of rates is really the thing that's going to impact the housing market the most, Bachaud said. When rates bounce around from week to week, a buyer looking into a house one day might not be able to afford the same property the next day, she said. The swinging movement of rates is going to keep buyers and sellers on their toes for longer than expected, Bachaud explained. For example, a homebuyer hoping to secure a $400,000, 30-year fixed-rate mortgage might have gotten a rate of about 6.82% in early April, according to Freddie Mac and Fed data. That works out to a monthly mortgage payment of around $2,613. 2 weeks later, rates were hovering at 7.10%. That slightly higher rate adds $75 to the monthly mortgage payment, or $27,000 over the life of the loan. Even a 1 percentage point difference may not sound like much, but it can mean almost $200 more on a monthly mortgage payment, said Jacob Channel, a senior economist at LendingTree. Would-be buyers are paying attention to the math. For the week ending April 19, the mortgage application demand dropped 2.7% compared with a week earlier, as average 30-year fixed-rate mortgages increased to 7.24% from 7.13%, according to recent data from the Mortgage Bankers Association's weekly mortgage applications survey. The spring housing market this year is somewhat getting back to normal, Bachaud said. Some areas are experiencing more sales as some buyers get used to the idea of 7% mortgage rates and look for ways to make it work, she said. Even so, more sales are expected to happen at the end of May and early June, she said. That's also when sellers tend to get the best prices.